Welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne. He is the founder and editor of the Daily Gold. Jordan, what I first want to do is look at some of these charts where gold compared to other markets. We're going to start off with gold versus foreign currencies. Something that you pointed out to your subscribers over the weekend is that this chart, gold versus foreign currencies, has recently broken down to, I believe, 52-week lows. This is just another sign of gold's continued struggle. I've even brought this up to some other precious metals commentators, and they said, wow, that surprised me. I thought gold would be going up against foreign currencies because of how much these foreign currencies have gotten hit. What's your takeaway from this fact that gold is down against foreign currencies?
Yes, Corey. Well, my takeaway is gold remains in a primary downtrend, and my takeaway is I don't want to say exceptionally weak because that's too strong of a word, but it's very weak in both nominal and real terms. And yes, gold against foreign currencies, the basket that I use, you can use the ETF UDN. And if you look at that chart, gold against UDN, I mean, gold has come down, or at the end of last week, it came down to the lowest level since the middle of 2016. So as you said, new 52-week low there, and also a new 2-year low. And when you look at gold against the stock market, I mean, that's been underperforming really badly. That's just been making lower lows and lower lows. So in real terms, gold has been really weak. And it's been a little bit surprising given how oversold gold got a month ago. You know, we would have thought that gold would have a better rally than it's had. But the fact that it's so weak in real terms explains why gold hasn't been able to rally that much. I've seen some gold analysts or / gold bugs. They've been excited that the dollar's rolled over a little bit. It's weak. It could go lower. I mean, we've talked about that. But even though that's happened, Corey, gold has just barely done anything. And I mean, that's a sign of gold being in a downtrend, because when the dollar is weak, if gold were in an uptrend or a bull market, gold would be, or gold stocks would be performing really well. So instead, you have precious metals barely responding to the weakness of the dollar. That's just a telltale sign of how weak the market is. So it's interesting because gold got fairly oversold about a month ago, and I've been expecting more of a rebound in nominal terms. And I know we'll get into the gold stocks, but, there's a chance that maybe their rally has topped out in the last couple of days. I don't have a strong opinion on that. I'm just saying maybe there's a chance. But at this point, given how weak gold is in real terms, and given that the dollar's kind of rolled over in a short-term sense, and gold hasn't even been able to get above 12.15, 12.20, it's just not a good sign for the sector. I mean, it doesn't mean it's going to suddenly fall apart again immediately, because there's still an oversold condition that needs to be corrected, and it's only been corrected for a month. So if gold and the gold stocks cannot go any higher here in terms of price, then they would be susceptible, in my opinion, to just bearish consolidation in the weeks ahead. Not necessarily a huge breakdown immediately, but if they can't go any higher here, then they would be susceptible to bearish consolidation for another month or two that eventually would lead to another move lower. But it's really disappointing that, given the bearish sentiment, gold has just, and silver as well, they've just been unable to do anything. And looking at it in real terms just really tells you how weak the market is.
Yeah, I think that key distinction, too, of seeing that general weakness in the U.S. dollar and gold not being able to get back into its trading range, especially the stocks not being able to pop back up into that trading range, should be a bit of a concern again. But if we look at the longer term chart, I have the monthly chart of gold pulled up here, and at the beginning of the year, a lot of people were saying gold is at the higher part of this range. It's touching that upper Bollinger Band. These Bollinger Bands are getting narrow, and now fast forward to where we are now, we're at the lower part of the range. We're touching the lower Bollinger Band, and these Bollinger Bands are even more narrow, plus the actual price is under some of these moving averages that a lot of people follow. What's the significance in that monthly chart? Again, hugging that lower Bollinger Band, tight Bollinger Bands, overall kind of depressed market.
Yeah, I mean, looking at the monthly chart, I mean, I don't pay that much attention to the Bollinger Bands. I know that the width is very tight, and I know that I was looking at that at points last year where you saw record tightness in a number of precious metals markets. But here and now, what I see on the monthly chart is there's support around 1200. And obviously last month, gold made a hammer that was pretty bullish. So to me, I was thinking, gold after last month, gold is going to be able to hold up for a few months. And I still don't think gold is ready immediately to plunge here. But looking at the monthly chart, as you said, Corey, I mean, it's lost all the long-term moving averages. We're talking about the 20-month, the 40-month. The 20-month is at 1277. So gold has clearly broken down on the monthly chart, and the next key support level is, I want to say, around 1120-ish, 1125, around that area. That's the next strong support. So if we see gold lose support around 1200 on a weekly and monthly basis, that could be the next downside target. But again, I don't think that's imminent per se. But just the overall technicals for the market are just not. I mean, precious metals are clearly in a downtrend. Gold has held up better than silver. I mean, silver has almost come down to the 2016 low. I mean, silver has been even weaker than the gold stocks in that respect. And this is what you get when you're in a bear market or a primary downtrend. You get gold, or I should say, you get silver and the gold stocks really underperforming gold. And that's what's been happening. So I would focus more, actually, if you're looking for more of a leading indicator, I would focus more on silver and the gold stocks, because gold eventually is going to follow those markets lower. But again, silver and the gold stocks, I know I'm getting off your original question here, but I mean, silver has barely done. I mean, it hasn't even had a rally like the gold stocks. So it's been really disappointing, and it's really interesting, given how oversold these markets are, that they haven't been able to generate any kind of sustained upward momentum. And we'll just have to watch very closely and see what happens, because if there's more bearish consolidation over the next, over the coming weeks or over the next month or so, that could not bode well for the end of the year, to be honest.
Now let's talk about those gold stocks, because GDX, it has gone through a little bit of a rebound here, up about 10% from its low. Well, actually, on today's move down, only up about, let's say, 8% from that low it put in at the very beginning of September. I know a lot of people kept on saying it's due for a bounce. We both agreed that it was due for a bounce. How important is it, or is it even important this week, to see gold, or to see GDX continue to put in some positive weekly gains?
I don't think it's important. Just because you have the Fed, and I mean that can cause, usually that causes a big move, and then that move is often a false move. Like we find out a day or 2 or 3 days later, it's a false move. So I don't want to read too much into how the market reacts today or tomorrow. Putting the Fed aside, I mean, over the last 4 or 5 days, we see that GDX has really been struggling around 19. And if you go back and you look at, where is the resistance, where the August high is just below 1950. So the closing high in August, I want to say, is around 1925. And again, you go back to the last 4, 5, 6 days, GDX has made all these tick marks around 19. So it's struggled there. That would be a lower high compared to the August peak. So we were talking beforehand, Corey, and I mean, there's a chance right now that in the last couple of days, like, that's been the high for this rally. And I mean, that doesn't mean that the miners are going to suddenly fall apart here, but I would not be surprised if we've already seen the high in terms of the rally, and then they go on over the weeks ahead to just consolidate and kind of move back and forth. because they're still probably too oversold to just downright fall apart immediately. But it bears watching in the coming days if that if that resistance around 19. I mean, if that's going to hold on to GDX and prevent it from, even moving up towards the August high around 1950. I mean, that was my minimum target for the rally, was the August high. But at this point, it looks like we're not going to get there. I mean, save for some kind of a Fed rescue today where, who knows, they say something and the market deems it really bullish and all the shorts cover and we have a huge rally and then it turns out to be a false move. But anyway, yeah, it concerns me over the last couple of days because it looks like, that could be a high that's in place. And if we can't take out that 19 high, or excuse me, the resistance at 1900 for GDX, then, I mean, eventually that's going to lead to another move lower, but after some consolidation.
Okay, yeah, so overall, this bounce just hasn't quite been as strong. Again, who knows? We might get some snapback right now. We might just keep on heading higher. But it is a bit worrisome that GDX hasn't been able to make it back up into that range. And overall, the sector just, again, continues to be very ignored and unloved. If, let's say, GDX and even gold just move sideways for the next couple months, that, I think, is another worrisome sign. But, hey, the fact of the matter is, even with some recent weakness in the dollar, gold hasn't been able to get that huge buy. We are all still waiting for that Fed announcement. We're recording this right before the Fed announcement. But I also think it's important to look past that Fed announcement and understand what the trend is going into this meeting, because usually still those trends after a couple days continue onward. Jordan, good chatting with you. Thanks again for your time. Have a great rest of your week.